Hi everyone, today let's talk about inflation, then we'll go over Disney earnings, then we'll go over Max Payne, then we'll go over the economic calendar, then we'll get into the charts, and then we'll finish up with my results for the day and my thoughts going into tomorrow's session. Don't forget to check out the Patreon and the Twitter linked in the description. And if you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at inflation, it came in a little lower than expectations, 4.9% compared to 5%, but core was right on the money with expectations. So headline a little bit lower, core still sticking at 5.5%. Looking at the numbers here, you can see eggs topping the charts. Food has been quite high here. You can see food and vehicle insurance pretty high up here as well. Food away from home up 8.6%. And then at the bottom, we have fuel, which is helping headline numbers come down quite a bit. Health insurance down, energy down overall, all items 4.9%. But you can see here with food, there are still some pretty high percentages in there. And then looking at the charts, comparing headline and core, you can see core sitting up here at 5.5%, headline at 4.9%, and core has been quite stubborn here, going down just slightly. Previous read was 5.6, but we were at 5.5 in February, and now we're back to 5.5 here in April. So still chopping quite high in this zone. I think this is pretty good evidence here for the fact that the Fed is going to keep rates higher for longer than the market expects anyway. If this core continues to trickle down very, very slowly, then it certainly makes sense that rates would have to stay higher for longer. And the main thing driving prices down right now are fuel and energy costs. Moving over to Disney earnings. They lost subscribers, but their numbers improved, so they're getting a little bit more lean on the subscriber side. They say that the losses narrowed despite losing 4 million subscribers. That's quite a lot. And the shares were down around 3%. Looking at the earnings, they came in at expectations, but that subscriber loss is really what's driving the stock down. That was a pretty big part of their growth thesis. And now that it's not really growing, that definitely into their future earnings. And you can see that subscriber miss here. Overall, it seems like Disney is doing well, but their future growth is definitely in question. And moving over to the Fed futures just for a minute, you can see the huge step up that we saw on the pause for June. Yesterday's probabilities were at 78, now we're at 93, almost 94. And markets are still expecting that first step down here in September. If inflation really starts to tick down, that's not impossible. But at this point, I would be hesitant to say that we're going to get that first step down in September. And then looking at November, we are still pricing in a second step down. So markets a little bit ambitious, a little bit overly bullish in my opinion right now. But again, you have to trade the markets that you have. Moving over to Max Payne here, you can see the numbers have come up quite a bit. Zooming out here, those 335 and 340 puts are still here in the system, but now we have a new put wall at 400, which is the new highest put strike. You can see that here. Highest call wall still 422. Decent amount of calls here at 416. Total number over 1 million here now. Put call ratio actually went up a little bit. Max Payne is at 410, right at the top of this peak for puts and calls here in the middle. Seems likely that we're going to finish here between 410 and 416 at the end of the week based on these numbers. So looking at the economic calendar for tomorrow, don't forget we have PPI tomorrow here at 8:30. Core here expected to tick up a little bit, but year over year numbers are lower. And then headline also ticking up pretty substantially, but again, year over year stepping down slightly. Moving over to the charts, starting with the S&Ps here on the 15 and the 4 hour, you can see we threw a wick through both the top and bottom levels that I was watching. Took out this bottom level by quite a lot here, which was definitely a bit of an issue for me. And then we have now a lower high setting up at the end of the day. Wicks through that level, clear rejection. Seems like this is going to pull back at least into this mid-range around 411.50. If that area breaks down, I'm still watching 410.50. And then on the longer term charts, you can see we have the 144 EMA here at 407.71 and then 405.26 below that. Moving over to the NASDAQ on the 15 and the daily. On CPI, we took out this upper level, pulled back quite heavily, got a little bit of chop here in the middle of the day, got chopped out a little bit more than I wanted to, came down, tested my level, that level clearly held, and then rallied into the end of the session, so that was not too bad to close. Momentum definitely continuing to look bullish here. And looking at this daily chart, you can see we're right at these highs, marking this high just before the August high. And if we break this level and hold and we start to see a little bit of a continuation here tomorrow, I think there's a good chance that we're going to eclipse these August highs before we get any kind of major pullback. I'm still watching this as a giant bearish wedge, and I do think that that will culminate at some point, but right now the trend is still bullish. Moving over to the Russell and the Dow, you can see the Russell threw a big wick through my next level here at 175.96, rejected extremely strongly all the way down to the 200 SMA, tagging that lower trend line that I've been watching, and then rallied here into the end of the session, closing above my 174.38 level. So at this point, you have to expect that this is probably going to rally back up to this 175.96 level. Momentum fairly bullish. RSI slightly bullish as well. Big volume at the end of the day, so some buying coming in here on the Russell. Dow, on the other hand, not nearly as bullish. We did throw a big wick to the upside, taking out this previous high, and then we rejected almost down to my next level. Now it looks like we're setting up a lower high here at resistance. So this looks a little bit weaker. We're below that level, and if it continues to hold below this level, you would expect that to roll down. Momentum is ticking towards bullish, so that would be interesting. Maybe it rejects off this level, sets up a higher low, and then we push through it to get a higher high from this previous high. That would be interesting. But right now, I think we're at clear resistance, looking to turn down first. Moving over to Tesla and Apple. Apple rallied up to its previous high, and now it's holding in that zone. If it breaks higher, we have a level up here at 176.13. If it breaks down from this previous high, then it looks like 170.90 will be the next level to the downside. Tesla, on the other hand, threw a big wick to the 55 EMA, rejected from there, and then finished basically unchanged. Momentum continues to roll over here, which is interesting. RSI declining very slowly. Similar to the Dow, I would expect this to go down first, potentially retest this level here at 164.50, this high from this previous rally. Come down, test that, get back above 167.34, and then maybe we see a little bit of follow through up to 177. But like I said, right now I think this is kind of weak. Moving over to Snowflake and Alphabet, you can see these are definitely on a run here. Snowflake continuing to make much higher highs, very close to taking out this previous high from January and February. And Alphabet doing a very similar move, took out all these previous highs, clear breakout, looks like it's going higher. Lots of volume here today, momentum very bullish. Both of these are overbought, but you definitely don't want to sell into a move like this. You have to be careful as these can run for quite a while. Moving over to Staples and Discretionary, Staples continues to roll over, continuing to hold with my thesis there. No changes from yesterday. Definitely bearish going into tomorrow. Watching 175.40 and the 55 EMA here. Discretionary, on the other hand, got a little bit of a pop from CPI, so we wicked the top of my supply zone, still holding below this trend line that I've been watching. If we get a nice rejection off of there, that's going to be pretty bearish. But we are back above all of the EMAs and SMAs as well as VWAP here on the 12-hour chart. So it's actually showing a little bit of strength going into tomorrow's session, which is interesting. So weakness here on Staples and strength on Discretionary. Moving over to Technology and Energy. Technology was the top performer for the day. Energy, on the other hand, was the bottom performer. So this is looking like it's going to break down below my 178.47 level, down to 75.78 at this previous low. Tech, on the other hand, looking to break out. If it breaks this level, we have a trend line sitting up here at around 155.70. If that breaks, I have a level at 160.16. So still bullish, still kind of a rising wedge, but similar to the NASDAQ, this can continue on for a while as this is a super, super large bearish rising wedge. Moving over to transports, you can see they wicked resistance on CPI and then sold off throughout the day, retested the 200 SMA on the hourly chart, rallied back up to VWAP. We're basically at that level now. And really, this looks pretty weak to me at this point. So we rallied into the zone. We're chopping at resistance. Can't get above it. RSI is going lower. And I would expect this to break back down to around 220 based on what we're seeing. Looking at the daily chart, we're at this longer term trend line. We'll see if that level holds. But like I said, if we get below it here, 220 is my level. And you can see that's a highly traded zone as well. Moving over to semis, we got a little bit of a bullish day. We still can't take out these previous highs. Going back to 1 May and 8 May here. So Doji, after the slight gap up, holding above this trend line here. We have 3 touches of that point now, waiting to see if this breaks down. which then I would be looking for this to break back down to this next level around 120. I have a level at 118.73 as well, down at the bottom of this wick. And that's what I'm looking for on semis. Momentum is slightly bullish, and RSI is still slightly bullish, but coming off of this previous high, got the breakdown, slow rally here, and then if this breaks this lower level, I think it's going to be a pretty big move to the downside. Moving over to yields, I pretty much don't talk about these anymore because they have been chopping around in this zone since mid-March. Nothing has really changed here. They moved down a little bit on that CPI read, so slightly bearish on yields. Should give us a little bit of strength on equities, but like I said, not a lot of movement here. Moving over to stocks above their 50-day and 200-day averages, you can see I'm still watching this downtrend. We're still holding in the zone. Got a little bit of a red day here today, not by much, but a little bit compared to yesterday on the 50-day average. You can see closer what that looks like. Big move up, ended up moving down at the end of the day. Momentum, definitely bearish. RSI, definitely bearish. 200-day average, similar thesis, but this right shoulder is being very stubborn at this midpoint, still holding above the 200 SMA, and we are basically unchanged from the previous day. So overall, not a lot happening here, but overall, it still looks bearish. Moving over to the dollar here on the hourly, you can see on the CPI read, we put a huge down move in, retested this level. I put it on a Patreon post here. If we got below here, I would expect a bigger breakdown, but we ended up rallying right off of that level. Clear touch, clear rejection, still a very well-respected level despite this choppy price action. And now we're selling off the 200 on the hourly chart, moving back into that zone, which should spell a little bit higher prices for equities. Daily chart, not showing much at all. Momentum, neutral. RSI, basically neutral, maybe slightly bearish. Moving over to the VIX here, you can see this trend line broke down, which was sad. We did throw a huge wick, retesting this trend line, and then broke down from that level. Now we have a potentially higher low setup. Maybe we come up, retest this level tomorrow. That would be interesting. But really, this is a breakdown here with a retest, and we should be looking for lower lows, potentially moving back down to this 1575 level, this previous low where we had that bigger move up. So overall, bearish here on the VIX, potentially looking and still looking for some higher prices in equities tomorrow. Moving over to my accounts here, you can see I was down $41. I kind of got whipsawed around in the middle of the day and I wasn't trading well, which is a little bit upsetting. It was up on the day, so I definitely should have been in a good position. We ended up closing below my 327 call, so that's max profit. Put some puts here on, which made money as well, but you can see this 325 call. That's where I kind of got whipsawed on that down move. I thought we were going to go a little bit lower and didn't work out, and then we rallied up, and now I'm in a losing position on these calls. Going into tomorrow, I have some 321 and 322 puts. 325 and 328 calls, so still generally neutral. If we get a nice little down move, I'll look to take these 325s off. That would be nice. And then I actually put on some puts and calls for 2 days out at 320 and 328. Those are in a nice profit here. Down 16 on the calls, but up 52 on the puts. We'll see how that continues to play out. But now that CPI is done, we got a little bit of a rally, and we'll see what happens. And we'll see if we get a little bit of a follow through. Overall, still neutral, not really leaning one way or the other. Let me know down in the comment section what you thought of inflation. With the lighter CPI, it seems like we're going to get the pause in June. And will markets be able to rally on that? Definitely let me know. Otherwise, like and subscribe if you got any value out of this video. And make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.